Welcome to today's session on profit and loss appropriation account. Okay. So, as we talk about this profit and loss appropriation account, so let me give you a small brief about this account before we move further. So, you must be aware of profit and loss account that we made at the end of the year. Profit and loss appropriation account is merely an extension of profit and loss account of the firm. This shows how the profits are appropriate or distributed among the partners. Thus, all the adjustments in respect to partners' salary, partners' commission, interest on capital, or interest on drawing, etc., are made only through this account. The starting point of this account is net profit or net loss as per the profit and loss account. Now let us move to understanding this account more through a question. Let us just action says two partners getting profits in the ratio 3:2 with capitals 50,000 and 30,000 respectively. Interest on capital is agreed at 6% per annum. Babu is to be allowed an annual salary of 2,500. Managers to be allowed a commission of 5,000. Amitabh also has given a loan on April 1, 2019 of rupees 5,000 to the firm without any agreement. During the year, the profit earned is 22,250. Prepare P&L appropriation account. Chali. So let us start making this. Okay. First of all, let us understand that. One second. I think there is some. This is loan of 50,000. Okay. Now, so now let us understand one thing out here in this question. There is a point called managers allowed commission. Manager means whom? Manager means the employee. The employee's commission, employee's salary, everything is charged on P&L account, right? So, yes, we will start with P&L appropriation, but in the working note, we have to first make the P&L account and then we can proceed for P&L appropriation. All right. So now I'm starting with P&L appropriation. But as I said that in the working note, we need to make P&L appropriation. So first of all, we need to make a P&L account here, right? Okay. Now for P&L account, we start with the profit which is showing here. That is 22,250. Okay. So the profit that is here is 22,250. From this profit, we are going to deduct manager's commission as well as the interest on Amitabh's loan also. Because loan is also charged on P&L account. All right. So by profit, that is 22 to 50. And over here, first of all, we talk about manager's commission, which is 5,000 rupees. Okay. Then to interest on loan. No. Interest on loan. As you can see, this question, no interest percentage for loan is given, right? So as per Partnership Act, the interest will be charged at the rate of 6% per annum. So 6% of 50,000 will be how much? This is 1% is 500, so 6% is 3,000. Okay, so 3,000. This loan is also deducted. Now let us see how much profit is left with us. Okay, so these two amounts are deducted. So this is 22,250. This is also 22,250, and this is minus 8,000 out of it. So if you minus 8,000 out of it, you are left with 14,250. This goes to P&L appropriation. Okay. Now, so we start, this is my starting profit for P&L appropriation. Okay. So now I start with this amount of profit, right? So this is by P&L account, that is my net profit, 14,250. Now, as I said, P&L account, P&L appropriation account is what? That is, it is a distributed account in which partners' salary, partners' commission, partners' expenses, everything made by the firm are distributed. Okay. So let us start with the first thing. That is, the first thing is interest on capital. Okay. So, to interest on capital account. How much money? Now, interest on capital is at the rate of 6% of their capital. So, this is Amitabh and this is Babu. Okay. 6% of 50,000. 6% of 50,000 will be again 3,000. Okay. So, this is 3,000. And then Babu's thing is the capital is 30,000. So 6% of 30,000 will be 1,800. Summed it off, this is 4,800. So 4,800 is charged on interest on capital. Then Babu is to be allowed an annual salary of rupees 2,500. So next is Babu's salary. Babu's salary is 2,500 annual. So we will write it like this. Had it been monthly, then we would have multiplied it by 12. Right? Then Amitabh is also given a loan. Loan has already been worked out. During here, the profits earned is this much. We have already taken care of. Now no more is there. So we need only to balance the whole thing. All right. So over here we have 14,250. This time also we will be writing the same thing. And here we are going to write the balance profit, which will be distributed among the partners. So to profit distributed to Amitabh and Babu. Okay, so how much profit have we earned out here? That is need to be understood. So from 14,250, I will be deducting 4,800 in interest on capital and 2,500 of Babu's salary. After deducting these two amounts, I get 6,950. Okay, so 6,950. Now, this 6,950 will be distributed among the two partners in this ratio 3:2. So, dividing this in 3:2 ratio, that is again taking you to working notes. Yeah, how do we do that? So, this is 3:2. 3:2 means 3/5 for A, that is Amitabh, and 2/5 for Babul. So Amitabh's share from this would be 3 upon 5 multiplied by 14,250. Okay, dear. So from this, how much do we get? This amount comes to be 4170. 4170. So here I write 4170. Similarly, for Babul also, this will be 2 upon 5 of this total amount, and this amount comes to be 2780. So for Babul, it is 2780, and this completes my P&L appropriation account. Okay, fine. So now, yeah. Now this question talks about making the P&L appropriation account and partners capital account as well. So very quickly, let's make partners capital account also in this. Okay. Now, partners capital account. Okay. Now let us understand this partners capital account, guys, is a ledger account to be prepared in the same format. So the format remains same. Just that since two partners are there, so obviously we'll be modifying this the format a little bit over here, and but the basic format remains the same. Okay. So let us draw the format very quickly. So we are here with partners capital account format, right? This is it. Particulars, journal folio. Then two partners are there, Amitabh and Baba. All right. So let us start and working, making this. Now, we start with what? We start with the by balance brought down. That is, the capital balance has to be mentioned out here. Now, as I told you in last video also on partners capital account, since nothing is mentioned in this question, so we will be making using fluctuating capital method. This is 50,000 and 30,000. 50,000 and 30,000 is here. Okay. Now, after that, then what all they have earned? They have earned on interest from capital. So, interest on capital account. And their earnings are 3,000 and 18. Okay. And then Babu's salary. Right? Salary account amount goes into Babu's account. Okay. And then the profit distribution. Okay. So by P&L appropriation account. All right. Amount is 4170 and 2780. All right. Now, let us see if we have drawings. We don't have drawings over here. So, no drawings, no interest on drawings to be mentioned. Okay. Now, so finally it's done. And if we sum the entire thing, for Amitabh, this comes to be 57,172. And for Babul, if we add the whole thing for Babul, this comes to be 37,080. 37,080. Since nothing is to be debited from this amount, so this whole thing goes to next accounting period. Thus, balance CD is written, right? And this completes my chapter. And yeah, so that was all for today's session. I hope you all understood the topic. Keep practicing, and I'll see you the next time. If you have any doubts, please contact me through my urban profile. Thank you very much.